Today on Resource Talks, a geologist with nearly 4 decades of deal making experience is talking to me about how to tell the good from the bad junior mining companies and projects. Just briefly for people watching or listening, if you want a summary of this conversation and all the other interviews that we do on Resource Talks, go to resourcetalks.com. There's a free newsletter. It goes out once a week with a bullet point summary of all the conversations from the week before. The geologist in question, his name is Tony Manini, and he's backed and buried more projects than most of us will and have ever looked at. The first one was actually Sepon, a Sepon discovery in Laos. It's a 3.5 million ounce gold and a 1 million ton copper resource, which went into production back in 2002 when I was learning the alphabet. And although I still have difficulties with the alphabet, Sepon is still in production today, which is impressive. Many other discoveries and notable happenings since and in between, but Tony's an Aussie though, so no time will be wasted on pleasantries here, which means I'll be shutting up already. And Tony, I'll let you do the talking. But first of all, thank you for your time today.
No worries. Thanks, Antonio. Great to be on, and looking forward to having a good chat.
I do as well, and the pleasure is mine because I really did enjoy our chat at the Dirty Boot in Colorado last month. So I really think this will be helpful to myself and also others out there. But for the record, I do have to start off every interview the way I always do with new guests, which is track record. What is yours? What's your track record in doing what you'll be preaching here today? And more importantly, have you made more money than you've lost?
Yeah, okay. So, as you mentioned, I'm a geologist with 40 years of background. I'll try to keep the answer pretty concise, or as concise as I possibly can. So, over the journey, I have been involved in, quite a lot of success and some failures, and we can talk about both of those. Essentially, I started as a geologist at CRA, which was a predecessor to Rio Tinto after CRA and Rio Tinto merged around 1999. I worked as an exploration geologist within Rio Tinto, 15 years in Rio Tinto, worked as everything really from the first day of exploration. So greenfields exploration started in diamonds with Rio, then through base metals, gold, and uranium and various other things over a 15-year period. I was fortunate, I guess, in those early days to work on a very significant uranium discovery called Rooter River in Western Australia early. So it's always, I think, a good thing as a young geologist to work on a project which is a new discovery, the excitement that's around that and the growth of it. I wasn't involved in the discovery. I came in during the evaluation phase. So that was great exposure. I had 5 years in Western Australia with CRA, and then I was called into the office of my boss at the time, Graham Drew, who said that he thought, or the company was starting, I was opening an office up in Laos. And he thought it'd be something that would be a good fit for me. So I didn't even know where Laos was. I'd only ever travelled out of Australia once when I was 14 years old with my parents. My father's from Italy, so that was a trip back to the homeland. So I hardly knew where Laos was, but I'd always wanted to work in the frontier areas that CRA were working in. At that time, it was pretty much Papua New Guinea and Indonesia. And so this was an extension, sort of, I guess, of the Southeast Asian exploration effort. And the company had made some great discoveries in PNG and Indonesia. So as somebody who was motivated by being involved in discoveries, the Laos opportunity was like, okay, I'm going from a new place. There has been very little work done. The company tells me there's a lot of prospectivity. So, I was attracted by that. I subsequently went to Laos for 3 months to have a look and stayed there for, around 10 years, of which I had first 2 years in Thailand, northern Thailand, 8 years in Laos, and then I had quite a bit of time in Indonesia back and forth. So that was sort of that initial phase. During that 8 years in Laos, we the team that I led really discovered and evaluated the Sepon deposits. So that was, when you're, I guess, involved in something really from the first day. So it's a great learning curve for any geologist, and I think there's a sort of a thematic here that we can talk to later on, Antonio. And it's really that exposure to success, I think, is quite a critical ingredient. So look, it was a small team. We did a lot of reconnaissance work. We made the discovery. I think you said 3.5 million ounces of gold, but I think it was actually 5 million ounces in the end, and really significant copper deposit. So that was ultimately, we worked on that. We sort of did the early exploration work. We did the evaluation work, and everything in a new frontier area. So it was on the Ho Chi Minh Trail in Laos, one of the most heavily bombed places actually on the planet. So we managed large ordnance clearance teams. We had, communities that had never seen essentially, Westerners. There was oxen, horses and carts, and, there was progression to roads and cars and motorcycles. So managing sort of all the community expectations, managing the environment, managing that was a great learning curve, and the geology was, exceptional and exciting. So, we had some great consultants come and help us on the project. You learn from all of those. You go away to, it was a great training ground, CRA, Rio Tinto. Extremely successful exploration group, and having that exposure to so many good people was experience. It's very hard to replicate. So 15 years, there. In Rio Tinto decided to sell the project in the late 90s. The gold price was $250 and the copper price was 63 cents, and we were selling a project in Laos. Ultimately, there was very little interest in it because of those things that I just talked about. Ho Chi Minh Trail, bottom of the market. There was some insurgency still running in the northern part of the country, so it was a big ask for people at that time, and the capital markets were shut. So even if you were interested, you probably couldn't put the money together. And that was subsequently what happened in the deal. I ran the commercial side of the transaction. So I'd taken the project effectively through the exploration phase, through the evaluation studies phase, where we had resources, and then ultimately I transitioned into a commercial role to run the divestment of the assets. That was subsequently acquired by Oxyana Limited, which was a junior company run by Owen Hegarty, who's been my business partner ever since. Owen had been 25 years at Rio Tinto, CRA, as the head of the copper and gold business in Asia. He was running this junior company, having come off a success himself with a management buyout of another asset within the group, and he was well known to the company, obviously, and that track record that he brought, and he was really the only one who put up some upfront money and convinced Rio Tinto to stay in for 20% of the assets. So, so that transaction got done, and then I subsequently transitioned. Well, Owen asked me, if I was interested in joining Oxyana to continue the development of the project, which I'd worked on for 8 years, to take it actually through feasibility into production. So that was an opportunity that was, it's sort of like, I was going to say, too good to refuse. It was too good to refuse from a career development perspective, but at the same time, Rio Tinto had offered me my dream job, which was to be the BD head over in Canada, in Vancouver, based in Vancouver at that time. So I've always had a passion for the capital markets, the junior end of town, and I've been an investor in that since I've been 15 years old. So, so that was a big, I was a bit torn at that point in time, but this was, Owen convinced me that this was a company making opportunity, a life making opportunity. So, effectively joined the Oxiana team. I think there was 3 or 4 of us, and we set about, developing the SEPON projects and raised small amounts of money and, gradually got the capital together to put it through feasibility study. First the gold mine into production, very, small gold mine, and we expanded the gold mine, and then off the back of that we built a big copper operation which had a lot of unique characteristics to it, and all of that was incredible experience, as you would anticipate. A frontier, new development, spending $800 million in Laos in the early 2000s to build, a big business. So then we ran very hard, and I won't go through it all in detail, but effectively over an 8-year period, we grew that company off the back of that SEPON development. We grew the company from I think a 5 million, around a 3 or 5 million market cap. I can't remember now, but it was a very small junior company into a $6.5 billion multi-asset producer. So we built SEPON copper and gold, gold and copper. Then we did a buyout of a mine called Golden Grove in Western Australia from Newmont. It was a non-core asset. We did a redevelopment of that. Subsequently that was the first bit of luck that, everyone needs to have a little bit of luck. So the zinc price went for a run, and it was a high-grade zinc mine, and it made a lot of money pretty quickly. We got into Prominent Hill very early. Junior company had discovered it, Minotaur Resources. I think most of the people looked at it, thought it was quite small. I had a look at it and had a detailed look at the geology and thought that there'd been a fundamental piece had been maybe misinterpreted. So we farmed into the project. I said to Owen, we're going to go over here, we're going to drill 4 holes, and if these holes hit, then we're away to the races, and we need to take this company over pretty quickly. So subsequently, we stepped out on a bit of a different interpretation of the geology. The holes hit hundreds of meters of ore grade copper and gold, and we took over the junior company, I think, for $90 million, and then we spent $1 billion to take it right through drill out, resources, feasibility study, and built a mine in South Australia, and all of that was done in a world record time of 7 years from start to finish. So, and that mine's operating today. So that asset is in the portfolio of Oz Minerals that just recently got sold to BHP. Mm-hmm. So that was Prominent Hill, Golden Grove Prominent, and then we had another project in Indonesia, Matabi, which we were putting in development. So four operations and another development project, and then we merged the company 2008, just before the GFC. Everything got crunched. That was with Zinifex, and Oxiana merged to become Oz Minerals, or partly Oz Minerals. Some of the assets were sold to MMG, the Chinese Minmetals Group, and the assets got split. So MMG went on to operate some of those. We bought the Golden Grove mine back from them years later. And then Oz Minerals was formed, and I was part of the executive team at Oz Minerals. I stayed there for a short period of time, and then I left to go back to my entrepreneurial pursuits, which was and formed an incubator company called Tigers Realm Group. So Tigers Realm Group, essentially, we put together private capital, myself, Owen, and a group of investors who'd made good money out of Oxiana, put private money together. We went and acquired assets globally, predominantly copper gold, but we had some met coal and we had some uranium as well. And we used our private capital to acquire them, work them up, and then ultimately, when we needed larger tranches of capital to up the spend rate, drill them out, etc. We went to the to the public markets. So out of that incubator company, we had Tigers Realm Coal, where we picked up a project that had a couple of holes in it from BHP. It was in far eastern Russia, really high quality met coal. We, we picked that up. We essentially drilled that out, discovered some true, really high quality met coal deposits on the coast in far eastern Russia. Took that all the way through studies and built the mine, and then the mine was sort of expanded. And it was a very hard yards to get to do that. But ultimately, it got built. We built it. We did the work. It got built, and it was scaling up and starting to go well. And the sanctions hit about 3 or 4 years ago, and ultimately, essentially lost control of the asset at that point in time. So that was Tigers Realm Coal. Was producing, about 1.2 million tonnes of met coal a year at that point. Then we had some Indonesian assets, which are in a junior company called Asia Met Resources, where I'm still the chairman. And we've taken that all the way through discovery, taken it through feasibility and ready to build. Now it's a shovel-ready copper project in project financing. So that's Asia Met listed on the London AIM. Again, been a hard grind there. Indonesia's not the easiest place, but we have a lot of background and experience there, and been able to get it through to this point, and subsequently get the mine built. And then probably the one that most people from the Canadian side would know is NextGen Energy. So NextGen Energy, the chairman of NextGen Energy, Chris McFadden, actually worked with us at the time. Chris knew Lee Courier. I'd known, or some of us had known, Andy Brown, who's the geologist from North Limited, very well, highly respected geologist, had quite a lot of uranium experience as well in the past. So anyway, they brought this opportunity in Canada to us, which was not the Arrow package. It was actually another package over near Rough Rider, a discovery that Rio Tinto subsequently acquired from Hathor Exploration. So it was a piece of ground next to that. That was the basis of the deal. We seeded Lee and Andy for the first $5 million at 5 cents, which sounds pretty good when the stock's trading about $13 today. That was about 11 years or something ago. So they then subsequently, got onto the opportunity to pick up the Arrow package. We supported them to do that, as in, we were happy to, dilute very early in the piece for them to do that off the back of what we considered to be, a very exciting package, and that's what it turned out to be. World-class discovery made in the second drill hole. So the geophysics was flown, the holes were sited by Andy, and the second hole, drilled a world-class deposit. The rest is history there. So that was NextGen Energy. And then the other thing, actually, we talked about this earlier on, Antonio, was the precursor to C3 Metals. So C3 Metals, again, TSX listed, working in Jamaica. We'd picked up the properties in Jamaica in that incubator company. We'd worked them. It was a difficult time. We farmed them out to Oz Minerals. Oz spent about $20 million. They ultimately, there's a lot of complexity in this around the deal, packaging up the deals and involved, which I won't spare the details. So we did all that, and then that's in the C3 now. And we've had a very clear business plan with C3, which we've been evolving. That's got a market cap of over $100 million today. So it's 120 million, I think it is, thereabouts. And drilling some great targets in a market which is hungry for new copper, and it's got some outstanding things to do. And then around 11 years ago, we set up EMR Capital, which is a private equity firm specialising in the resources sector. The strategy of EMR is very different to the incubator models and things that I just talked about in the junior space. It's really it's operational turnarounds. So we buy existing producing assets or assets on care and maintenance where the infrastructure's been built, and we put capital and we've got through that background that I've just described, we've got a very strong operating team of people. We put good people to work with capital with a very clear plan to create value out of the asset, not relying on the commodity price to drive value. It's actually fundamentally what we can do with the asset to create value, turn those assets around, optimize them, expand them, and then ultimately on-sell them. So that's the MR private equity business. We run about $3 billion on the behalf of US pensions, university endowments, and families, wealthy families. So that's EMR. We've been going about 11 years or so. Then for my sins, I've do a couple of other things in the mining services industry privately. But I think going to your question, in terms of value creation, so I think, we've had our ups and downs. I think it's fair to say anybody in this industry that doesn't have ups and downs is probably not really from this industry, but we've certainly, I'm very proud to say we've created an enormous amount of value for shareholders, for stakeholders, for governments, for lots of different people, and made a bit of money for ourselves along the way. But, we're very proud of our track record in terms of not just discovering things, developing things, but, our environmental standards, our social standards, and everything else. And that's really, I always point people to the fact that major companies, Newmont, Rio Tinto, Anglo Gold, many of the large companies are happy to sell assets to us as good stewards of those assets. So to me, that says that we've been doing something right along the way.
I think that's fair to say, and a lot of interesting things there that you're touching upon. I'm not hearing much about Andina, or it used to be Pampa, which you just recently got involved with, and that actually is one of the interesting parts for me here, because that's really what I'm wondering here. How do you recognize stuff like that where you do want to get involved early on? Like, what are the bones of a good junior, if you will? And at first I thought, I'd start asking questions about the geology and whatnot, because you are a geo, that's what you do. But it actually makes more sense, having heard the entire track record here, makes more sense to ask you what you think the beginning of a good junior is. So where do you start when you first find out about a company like Andina or whatever else it might be? What's the first thing you look at?
Yeah, okay. So really, fundamentally, you've got to look for, it's an easy thing to say. It's a harder thing to do. To look for quality projects that have high probability of being an economic proposition. So from day one, you've got to look at something and say, do I believe that this asset can one day make a mine? So that's fundamentally how I would look at things, and that translates into what people call company maker assets. So, does it have the shape, size, footprint, location, all the fundamental things that ultimately could make it an economic proposition? So that's really the starting criteria. And, it's interesting. I've just run you through the history. There's a couple of younger entrepreneurs that have come through our organisations that are quite prominent in the markets now. And Craig Parry is one, who's well known in the markets out of Vancouver, and they've got some really good quality projects, and have created billion-dollar plus companies. Craig was with us for many years. Charles Funk, who's got Heliostar, he's got production and he's growing his production and building out a mine. And then James de Crepigny over here in the Oz market with Catalyst, which is, essentially, $1.5 billion, $2 billion type market cap company. So all of those sort of younger guys came through, I guess, with the same DNA, and that is start with assets that can clearly have a pathway to being an economic proposition. So that's the starting point. How do you find them? So there's many different angles, Antonio, as to what that looks like. So the Andina, I'll use the Andina example. So Andina, we've taken an approach with Andina, and that is secure under or off the radar tier 1 or tier 2 copper opportunities in South America where there's a high probability of M&A. So that's sort of the key point of the starting thesis. And then we put together, a strong team that needs to execute on high quality work, drilling, studies, adds very significant value, de-risk the projects. It goes to that economic proposition, de-risk, and then define what that economic proposition looks like, that pathway and economic proposition. So at the same time as you sort of got strong technical people, you've got strong commercial people to secure the deals in the first place. You also need to build out a strong capital markets profile, and a good share registry. And we talked about the share registers earlier on, where you've got supportive capital through the journey, because it is a journey and you've got to have supportive capital, people who have done this before. They understand what the journey is, they understand what the risks are, and they're backing you and the team to actually execute well, and understanding that it's a probabilities game, but by having the right recipe, you get the probability stacked into your favour. And I think many people understand that this business, exploration, is a venture capital business. A lot of people don't understand it's a venture capital business and how you manage a venture capital business, but it's a probabilities-based business. It's 1,030 prospects make one mine. Nobody can play 1,030 to 1. So you've got to look at, okay, how do you get yourself from 1,030 down to a manageable number? And I think that manageable number is somewhere between 6 and 10. And then it goes to all of these things. It's okay, you've got a very clear business plan. You've got to look at the assets from the start as being potential economic propositions. You've got to build the team and the capital around it, and then execute well to deliver a liquidity event at the end of the day, or build a mine, if that's what you intend to do as part of the business plan. Mm-hmm. So I think that's sort of in a business context. And then how do you find the projects, I think was your other question. Feel free to jump in. But I guess through that 40 years of sort of global diversified experience, you get to work with and network and make contacts with a lot of people globally. So when I go looking for a project, we set very specific criteria as to what the project needs to look like. And then, we go out to the network, and the network's network and various others. And, things like I would call around some of the most experienced geologists in the world and say, hey, where's the one project that you worked on with, let's call it Anglo American, or with Rio Tinto or whoever that you worked for, that for whatever some reason um, you just never got to do what you wanted to do on that project, and you think it's got great potential. So that's just one sort of way that I would approach it. But I think we're very, one of the I think the key thing is that we're very particular about what we get into in the first place, geologically, and the ability to execute. Now in Andina, we've sort of um, part of the strategy in Andina is to, I've already said tier one and tier two copper opportunities, but we wanted to find things that had an all grade intersection in them. So they'd already been drilled, but for one reason or another, they hadn't actually been pursued. And there's history around both of the projects that Andina's got in the portfolio, the two core projects being Pequenas and through the takeover of Rugby Resources, the Cabrasco project in Colombia. So both of these have had different histories, but they are overlooked projects which have, what I would put into the tier one, tier two, intersections. So big, wide intervals of what look to be potentially economic grades. So that's been a key driver. If you look at, let's take Robert Friedland, for example. Robert Friedland, has a fundamental, I guess, motivation to find world-class deposits, and pretty much will go wherever those deposits may be, because his track record, ultimately, he can put the capital together to advance them. And if they are truly tier one or tier two, then you can back solve all the other issues that come with that over time. The Lundins have sort of done the same thing up in the high Andes there in Argentina with Filo, and that's an overnight success that probably took 20 years. So I think, Antonio, that maybe gives a little bit of a flavour as to the way that we think about things. So it's firstly driven by the asset profile, and then it's really about getting the right execution team. It's about building the right capital markets profile to support the development with capital that it needs. It's not easy, with the cyclicity and the volatility of our markets, but you just need to be able to keep them alive, and put the capital together to be able to advance them and drive them forward. So yeah, I think they're all all important things.
Mm. There's lots to touch upon there, but actually the beginning of it, of your answer, there was, I think, one of the more interesting points for me, because you said you should ask yourself early on, will it be a mine? And I suppose that makes sense from your perspective as an operator. But then at the same time, it doesn't have to be a mine in order for me as a retail investor to make money on it, right? I mean, stocks go up and down for making a discovery, essentially, or not making a discovery in that case. So do I still have to keep that approach, even, from my sort of retail perspective? Do I always have to look for a mine, or am I looking for discoveries?
No. So I said a discovery. What is the right way to put it? So when I say a mine, I'm saying, okay, if it's a discovery, then it's a discovery which has a footprint to it that says that it's going to be a mine. So it's not like you have to be the miner, or you have to take it through to be a mine. I mean, look at, Great Bear's a terrific example, right? They basically drilled a big deposit out over time and then ultimately sold it without a resource on it. So, but, everybody that looked at it from a distance knew that by the scale and grade, it was going to be a mine. So I think that's really what I'm saying. Same thing with next gen energy. It's like it's a world class deposit. It's going to be a mine. Kamoa Kakula. The Filo mining. And there's others that are. There's lots of others that. It's really about, does it have the shape, size, grade? I mean, I see so many times, so-called discoveries where people, might be drilling, hundreds of meters of point 0.2, point 0.2, point 0.1. Well, that's never going to be a mine. So unless it's got some real peculiarity that, I think absolutely you're 100% right. Retail investors have the opportunity to participate in the discovery phase. They don't need to be there for the mine phase. In fact, as an investor myself, and the junior companies that I'm involved in, the main focus for those companies is really on the discovery phase, and ultimately somebody else builds it. So even though I've been involved in many builds, it doesn't necessarily need to be the focus of a junior company. In fact, I think junior companies probably not, that's not their skill set. And typically when a junior company, tries to take, I shouldn't say typically, but often when a junior company tries to transition to a miner, it's a rocky road. Particularly with a single asset, it's a rocky road. So, I think, there's a role to play for the junior explorer, and there's a role to play for the bigger guys. The medium, small to medium sized developers, and the large majors. So it's about knowing where your strengths lie, where your skill sets lie, and what space and which part of the business side that you actually that you're trying to create value from.
Yeah. When you start looking at stuff like that, or for stuff like that, what are kind of the immediate red flags that you look for? Is it corporate level? Do you start with the rocks and you're looking for like faulty mineralogy, metallurgy? What are you looking for?
Yeah, all of the above. So there's an informal checklist, if you like, in your mind. So number one, does it have all grades to start with? Number two, is it in a location that you can develop, you can execute, you can operate in? That's very important. That's socially, environmentally, services, access, all of those things that go into just enabling you to do the early stage exploration work. And look, we're pretty good. Exploration geologists are pretty good at solving for a lot of those sorts of issues, access and water and various other things in the early phases. But, I like to see an asset that's got, it's no point in finding something that's extremely good inside a national park, for example. So are there any showstoppers? So I call them showstoppers, potential showstoppers. No. Has it got demonstrated ore grades and widths? I like things where there's a definitive path to a definitive test. So I like definitive tests, because ultimately to be successful, as the same way as to be successful as an investor is the same way to be successful as an explorer, and that is to essentially cut your losses early. The things that are not when the original thesis hasn't stacked up, or you start diverting from your original thesis, you need to cut those things early. And that's one of the most difficult things for both investors and for explorers to do. But it's fundamentally critical to a probabilities management business, which is what this is.
I know that's actually, that last part is funny because that's something you told me in the Dusty Boot as well. You said if someone asks you what is your job, and a geologist tells you that he's anything else but a probabilities manager, you might want to look elsewhere. What Talk to me a little bit more about that. What do you mean a probability manager? And again, it goes back to the fact that most things will never really make it through to production, but not even to discovery. So yeah, talk to me about that.
Yeah. Okay. So look, I mean, if you sort of break it down into its simplest form, what is exploration? So firstly, I've said a number of times through this interview, it's a venture capital business. So you've got to understand what is a venture capital business. And a venture capital business is effectively as it's described, but it has, and I mentioned 1,030 to 1, but let's assume we can get it down to a manageable level. It's, the probabilities of success are, call it 1 in 10. So then we have to manage the 1 in 10 to drive a successful outcome. So what is exploration fundamentally? It's data collection and it's pattern recognition in data, and then acting on that by acting appropriately on the patterns in the data. So that's why it's very important to have a very clear plan and gating posts in terms of, okay, if we see this, we do this. If we don't see this, we do that. But you need to have a pathway which is either gated to take you forward or gated to get you out of that asset. So it may be that, look, we drill the holes, it doesn't look big enough, let's on-sell it. It may be this thing's a dead duck and let's just cut our losses and get out of this because it fundamentally hasn't met the thesis or the gateposts that we set for it, and you cut those. So you then take the better ones forward, and then ultimately you rebuild your pipeline with better quality things, and you continue to manage the probabilities that way. It's the same with investing. The way I think about it, okay, I can't do 1,030 to 1. I take 10. I can manage 10. Let's just call it for the sake of it, 10 $1 million bets. That's $10 million. Okay, I know that if I execute well on the venture capital business that I just described, that I should be able to get one of those in the 10 to 20x bracket, maybe better. I then should be able to get two of those into the 3 to 5x bracket. I then have another two that probably I might make a little bit on, I might break even, and then I'm going to have two or three that, they haven't shaped up for whatever reason. And the most critical thing with those things is I don't keep spending money on them. I don't keep utilising resources on them. I cut them loose early. So, it's not an easy thing to do. Me personally, even when I was young and didn't have a lot of money, I was always prepared to cut my losses, sometimes very substantial losses early, to concentrate on the bigger things. So I think you got to have the right temperament for that. Not that many people have the right temperament for that. Even for me today, after 40 years, it's a hard thing to do. My 22-year-old son says to me, Dad, it's stick to your plan. So, so I think that's when I say probabilities management business. That's, I think, hopefully, through that description, that's sort of how I think about it. So that's both investing and in the exploration business as well. So, and Andina, let's take Andina. It's got 3 projects. I'd love them all to be successful and shape up as mines, but ultimately, our downside is protected by the quality of the assets we have, and we've got 3 of them. And, one of those, hopefully turns into a tier 1 world-class asset. And, maybe if we're really lucky, we get another one that's turns out to be good. But the probabilities are probably stacked against us to get 3 out of 3.
Yeah. And it's essentially you figuring out how not to put money in stuff that will lower those probabilities for you. Um, that might be an approach worth taking here as well. How do you? What are the immediate red flags in your process? What is it that you're looking for?
Yeah.
That yeah.
Yep. Yeah. So look, I'm very big on people. So the team. So spend a disproportionate amount of your time diligencing the people. I think that's super critical. There's no surprises when people often ask, well, why are there a small number of people in this industry, like a Ross Beatty that you mentioned before, or a Robert Friedland, or and there's a number of these people around, Richard Wark, or why are they the successful guys? Here in Australia, we've got some great entrepreneurs too, and but the people have been involved in these things 3 times or 4 times, and then you've got thousands of people who have been involved in success. So then you say, well, why is that, right? And you sort of drill down, and I think they're people who they've got the ability to build really good teams. That's super critical. They don't necessarily need to be the best people themselves, but they've got the ability to build really good teams, attract great people, technical, commercial, country management, all the different aspects that go into it. They understand what the business is. They take risk, but they manage risk accordingly. They manage those probabilities well. And then fundamentally over a long period of time, they get repeat successes off the back of that formula, which only strengthens over time. So people is critical, right? So good people will, okay, if this project doesn't shape up, they're going to give you another shot because they'll find another good project. And if you've got a bit of a longer term and patient view, those people probably reinvent themselves and find another great project or another good project to give you another shot. They won't walk away and say, it's a dead dog and everyone loses their money and too bad. So I think people are really important. There's a lot of lifestyle in the business. I call it lifestyle, where people, I think fundamentally just flog dead horses that are never going to be success, but they've got a nice, comfortable life, salaries, they live where they want to live. They don't get out of their comfort zone. So I think the people part's extremely important. And then, you've got to have strong technical capability to identify, the really good opportunities that fit within the business plan that's set. And then you've got to have an execution team, really good execution team. So, to me, it's all about the people. It's people who understand the business they're in, they understand the commercial aspects, they are good executors, they're good managers of probabilities. So what does that mean? Just find a great team of people and, back that team of people. At the same time, you need to keep your eye out for, I think, strong technical players with strong technical people. The ore finders, they sometimes may not be the most polished people. They may not be the ones who that everyone knows, but they're technically extremely capable and very good explorers, and they get themselves into the right place, on a consistent basis, which gives you a good shot at, getting a drill hit.
Mm.
So, and one thing I didn't mention was it's really, to be successful in this business, you got to love the business and be super passionate about it. Like I'm 40 years and I'm like out of bed early in the morning morning. I'm like so motivated, and then I'm motivated by discovery. I love, the thrill, and it goes back to that sort of bit of a long-winded start that background that I gave you, Antonio, and that I think I think good geologists and good explorers, I equate them to like hunting dogs, a dog, a hunting dog that's never been involved in a hunt or let's not call it a kill, but a successful hunt, um, is will never make a very good hunting dog. So I think if you haven't had that exposure to what success looks like in any industry, really, but I think in this industry in particular, then it's hard to have that drive, passion, motivation, vision, know what it takes, the patience. So I think that's a critical piece of it too. Look for passionate, driven people who know what they're doing, and then it gives you a better than even chance of having some success.
How important is the way that the team is going to spend money to you when you're looking to get involved? And in your case, interesting here because I actually know that you'd like keeping G&A low, whereas like for example, where and I know that's not up to you right now, but next gen's G&A is one that's discussed a lot in the industry just because of how high it is and how they market and the Formula Ones and everything else in between. So yeah, how do you look at G&A, and then if you care to comment on next gen's G&A right now, that's interesting too.
Yeah, okay. Let me just think of so I mean at the early stages, the exploration phase, whether it's Andina or C3 or Asia Med or anything that I've been involved in early stage, even when I worked for CRA and Rio Tinto, we weren't wasting any money either. But I just have some simple rules of thumbs. I mean, I think I like to see 75%. 75% of the money going into direct exploration. So, 25% is the right number, up to 30 in some cases, because some places you've got, say, you've got to do more work on government relations or community programs or various other things. But, in terms of overhead G&A, head office, teams of people, etc., about 30% is sort of the 25 to 30% is the right number, and 70% of the money into the ground. If you do that, then you give yourself a really good chance of being successful.
Mm-hmm.
But as as and look, that's not it's not as straightforward an answer as it should be or could be, because it depends on what people include in their exploration costs versus their head office costs, etc. So, like what is in the head office cost? Where do the salaries get paid from, etc. So I like to break it down when we run a budget. The people that are involved directly in the geologists who are in the field running the programs, their direct exploration costs. What is the head office costs? Is your administration, your office, your marketing, and your corporate costs, essentially. So that's the basket that I sort of say shouldn't be probably more than 25-30% of your total costs. Mm-hmm. So I think you got to look at it that way. In terms of next gen, look, there's been a lot of criticism of next gen around that. I haven't actually gone away and looked at, okay, what's the relative spend there versus spend on the project. So I can't comment around those ratios. But investors seem to be very supportive of whatever it is that Lee's doing. Certainly having no trouble raising large amounts of capital. So I'm not one to be criticising, because, to be honest, I don't know the detail around it. It seems a little unusual to be sponsoring an F1 team as an equity-dependent company, but Lee might have good reasons for doing that, and maybe his investors are supportive of that. I don't know the detail.
Yeah, that's something that it's been a while since I spoke with Lee, but I'll have to get him back on and talk about that as well sometime soon. I want to go back to the geology with you though, Tony, here, because I recently spoke to a geologist who manages money, and I asked them, is there can I make money in this space as a non-geologist? And he essentially told me there's really no hope for you. And so there was a bit of a letdown for me there as a retail investor. But what are the main things that non-geos can look for when looking at early stage projects?
Yeah, okay. So, I mean, I'll just go back to what I said before and reiterate those things. So, I think if you're not a geologist, start with the people, right? You still be able to work out who are the people that are worth following and backing. And so that's number one. So give yourself look at the track record of the people. But when I say that, I mean, do some proper diligence on the people. Like, I know from the questions that you ask, Antonio, you're very, you are very people focused. So I think that's a good starting point, right? So go back to, okay, what are they? Who are the people? What's their track record? You know, does this look like a lifestyle company? What percentage of money is going into direct exploration? Are they flying around the world first class doing, and spending half the budget on markets? So just start, that's a very important piece. And, I spent a lot of time on that myself, right? So as an investor, in fact, I've almost, after 40 years, I have a rule now. And that is, if I don't know the people myself, or the people are not known to people I trust, then I'm unlikely to invest in.
Mm-hmm.
So, that's that piece. Now, that said, therefore, my longer term patient capital, things that I'm thinking about backing for, 3 to 5 years, or more. And by the way, I haven't mentioned patience. Patience is a competitive advantage and competitive strength if you have it, particularly in today's world. So people, and then in terms of, okay, if you're not a geologist and you're looking at a project, I think there's a few simple rules that you sort of need to think about. Firstly, is it in a proven terrain? Is it in a proven province? Is someone going and looking for porphyries in somewhere that's never been a porphyry discovered before? Probably not a great idea, right? So give yourself the best chance by, and I'll use the example of the companies I'm involved in, Andina and C3, right? C3 is up in the Uri-Andahuaylas belt in Peru. There's four tier one and tier two deposits there, right? And the grounds, we've put together a package of ground that's has never had any real exploration on in a world-class belt. So that's a good starting point, Piaquenes in Argentina, it's been 30 years in a private company next to 2.4 billion tonnes of 0.43 copper. Not a bad place to be, the Cabrasco in Colombia, there's multiple porphyries sort of in that district. So that's a good starting point. Look at what, is it in the right terrain? And then how much work's been done, right? How mature is it? Like, has there been not much work a lot of work been done? Do the people have the right expertise in that particular deposit type? So, there's bits and pieces of the puzzle that you can think about as a non-geologist that are an important recipe for exploration success. So, in proven terrain, the project hasn't had much work or it's had a lot of work. The people really know what they're doing. They've got a good track record. And the footprint's big. Like, I like to look for things where the footprint's big, right? You go to the Anderwoiler belt. There's well, though the footprints are not that big there for certain reasons, but uh, you look at Peakennis, there's huge alteration systems there. You look at Philo, look at the size of the alteration system at Philo. So look for things where there's scale, there's big footprint, they're relatively underexplored, the people know what they're doing. So there's quite a lot of things I think you don't have to be a geologist to work those things out.
Mhm.
You
You're
just
giving me
got
hope. You're giving me hope,
you
Tony,
just
and I
got to be
appreciate that.
you just got to be systematic. I mean, it helps to be a geologist for sure, but let's be quite frank and honest here. Is that there's a lot of geologists that haven't found anything. Lots of them, right?
Most of them.
Uh, the majority, right? So thinking that being a geologist it's going to give you some advantage, of course, but if you don't have the right processes as a geologist, you're not going to be successful either. So you, as a non-geologist, can actually be good at the processes, good at the working out how do you stack the probabilities in your favour through some of those things that I've talked about, and probably others. Are they spending the money in the ground? Are they the right people? Is it underexplored ground? Is it the right place? Is it a big footprint? And then I think there's plenty of room. I mean, there's fund managers that make lots of money, and they're not geologists in this space. So you can do it.
Yeah. Well, talking about money, and I know you almost have to go here, Tony, but what about valuations when you look at something like that and the team checks out and the jurisdiction and the rocks and everything that you like there checks out? What's too much to pay for early stage exploration? And interesting specifically with you again, because, and fair disclaimer and honest confession, I do own shares of C3 Metals, but again, 120 million market cap, it's early stage exploration. Andina, 100 million market cap, early stage exploration. Isn't that too much? And how do you know what's too much to pay for early stage?
Yeah. Okay. So let's break that down into a couple of different things. So um, C3, you have a major company spending $75 million to earn its interest in Jamaica. It has, so you got to look at the sum of the parts. So that's one piece. You've already got a number of porphyries being drilled. They've either got grade or they haven't got tons, but there's still a lot of work to be done there. They've got the standalone gold project, and then they've got the Khaleesi project up in the Anderwoiler belt, plus Jasperoidy. So you look at Jasperoidy. Jasperoidy, people have forgotten about Jasperoidy, but it's a fundamentally important piece when you look at the market cap of C3, because Jasperoidy it's about 55 million tonnes of 0.6, 0.7%, but it's actually got a very high grade piece in it as well. Open pittable, like less than probably 1-to-1 strip ratio, oxide copper up in the Anderwoiler belt. And that could be developed into a mine by a small to medium sized producer. So that to me underpins the value of the company in its own right. That can be sold at some point or commercialised through a JV or something journey. You've got so you sort of got to look at the sum of the parts, I think, and say, okay, well, this still makes sense. $100 million makes sense in this market, given you've got Jasperoidy there, you've got a major joint venture, and you're drilling, one of the best looking porphyry skarn targets in a proven belt. So, the value proposition for me still stacks up. Otherwise, I should be selling my shares too, right? So, it's the same question. If you're not buying, then you should be selling. Now, my entry point obviously is a bit lower. The second piece is let's take a little bit of a different profile, which is Andina profile. And the Andina profile is the discoveries have actually been made. You got a number of ore grade intersections into Peakennis Central. You've got Peakennis East has only had 2 holes, but one hole's already sort of got ore grade type intersections. Not good enough yet, but it's got signs, and for for a first hole, it looks very encouraging. And then you've got 2.4 billion tonnes sort of next door. So ultimately, there's a value creation package that sits there at Pearkennis.
Mm-hmm.
You've got Mantow sitting down there. Yes, it's early stage, but it's next to a new discovery in the right geology, and it's got indicative, high-grade copper and gold rock chips. And then you have, the Carrasco, where you've got, three exceptionally good, big, long, ore grade intervals already. So, I think it's still dirt cheap at the current. If you look at the sum of the parts of those three projects relative to the market, it's one of the reasons that I've been, I've put a lot of investment of my own money and time into Andina is because I see it as an asymmetric bet. The downside is really protected by the quality of the assets and the fact that the discoveries have already been made, and each of them are in districts where there's a high likelihood of M&A in due course, and the upside, is open ended and looks exceptional. So for me, that's a bit of a no-brainer type of setup. And, I think your entry, going to your original question, is that your entry price, your entry valuation, it's not necessarily price, but your entry valuation is always your best protection on the downside. So I think, whether it's 100 million or 200 million or 10 million, it's sort of not that relevant. You've got to go and say, well, what is it? What are the sum of the parts worth? What are the sum of the parts worth? And I think if you break down C3 and Andina, you'll see that there's still the sum of the parts make them very compelling investments even at this point.
I feel like we've only scratched the surface for what's in your head, or maybe not even. So I really am looking forward to potentially another conversation. What am I forgetting to ask you though here at the end? What did you come here hoping to talk about that I failed to bring up?
No, I think we covered most of the ground. It's pretty wide ranging. I mean, it's around the core things that you can see that I'm pretty passionate about it. I can talk about it all day if you'd like to. But, it's a combination of investment in that sort of junior end, and then, how to manage that for success, which is really, I spend a huge amount of my time thinking about that. I didn't mention the books, but, I think we talked about it one other time. I'm a very avid reader and an avid listener of podcasts, and a lot of that's around understanding probabilities, chance. We mentioned Annie Duke's book, Thinking in Bets. So I like to give that book to the CEOs and the exploration managers of any of the companies I'm involved in. I think the other one's called Quit. And, it covers a lot of topics. It's a professional poker player, but or an ex-professional poker player, but great books. And then, Daniel Kahneman's works on, just biases and, then I listen to wide ranges of the world's best investors and the best explorers, and, then, you build a framework in your mind. So I'd encourage anyone who's really wants to do well in this space I live it and breathe it 24/7, sort of in my mind all day. My wife drives my wife crazy, but she's always asking me, what are you thinking about? And, usually it's this topic. So, I'd sort of encourage people to, particularly, like as you say, I mean, if you're a non-geologist, then all the stuff that I'm talking about is relevant. You got to work if you want to be successful in anything, you got to work hard at it.
Well, does Craig Perry have his catchphrase or essentially his checklist, size of the prize, cost of the test, chance of success? Does he have that from you?
Well, we all grew up with it. Yep. It actually comes from Rio Tinto.
Yeah. I think he told me that story and how he looks at that too. And I'm seeing a lot of similarities here with you. So it's funny to see it that way. But I know you have to go now though, Tony, and I've not been too respectful of your time. So I'll try to be that right now. Thank you so much for doing this. Really appreciate your time.
All right, good on you, Antonio. Thanks for having me on, and yeah, I hope it was people find it beneficial. Maybe we'll have a follow up one day at the Dusty Bird.